things that we spend a lot of time discussing with people who come and visit with us for interviews, interns, hires, is the little part of our series on what we call timeless math. Candidly, it is about the impact of huge losses. I have a current one that we'll discuss at the end. But if you look at the green line, it is the gain after a loss. Let's take the first example. If you lose 10%, it takes 11% to get back even. Let's skip over. If you lose 30%, it takes 43% to get back even. And that is something that most people don't understand. And yet, you can see it, the lower the losses, the less percent gain that you have to get there. But if you have these severe ones, like 50% takes 100% gain. And I just looked up a stock for a lady, and she had inherited the money and didn't do anything with it. In 2008, we had a little corrective action, and it lost 90-something% of its money. So if you go over and look at, we do have 90%, and it takes a 900% gain to get back even, not make money, but just to get back even. And in fact, I can report to you that it's still not back even and some 15 years or so in the past. So that's an extreme example, but one of the young men who worked with us has a little clip of this on his tape to his computer. I guess he's a UGA graduate, so he has to have a little help on the side when he gets to talking about these things and use them as examples. So let's just take the current situation that we're in. Starting in 2022, we started a corrective action, and it was down 24 point something percent. Let's just make it 25%. And if we look at our little chart here, 20%, it would take a 25% gain to get back even. But somewhere in between there, a 25%, I can tell you, it will take a 33% to do that. But let's get to the real math. At the bottom of the market in October of 22, we have been up 18%, roughly. Now, we're going to update this as we close out the month, and I think Joe may make a comment on it. And of the 18%, it was down 25, so it would probably put my bad math at about 7% would get me back even. But I'm sorry to say that it's really going to be a little bit more than that. I think my math says that it will take 12.5% to get back even, not the 5 or what I said, 5 or 7%. The point is, we consider not losing money an equal to or as important as our returns, because the time usage of your money, as well as the having the most money available to you at whatever time that you might want it. And this is one of the guarantees that we have, that we always are striving to do this. It's not easy. Very few people really do it and do it well. And we have enough experience that we have done rather well negotiating things along these lines. Feel free to call us about any of these things. And this is just one another example that we like to use for our Timeless Math series. Thanks.